Good day, everyone. Well, I've had some questions, one from a member and there's been some discussion regarding how one could have predicted the big drop in the markets due to the Trump impeachment issue. As you all know, the markets gapped down and continued to head lower on that day. So first rule of investing is to always obey your stops. Selling on the impeachment drop, if your stops were hit, was the exact right thing to do. Since such news events can get worse before they get better. In this case, the markets got better the very next day, and since then have recovered all of their losses. Now, part of the reason for the quick turnaround is keep in mind QE from global central banks continues en masse at full bore speed, and that QE finds its way into the tallest standing midgets, which is U.S. stocks. And that helps to create a shallow floor in U.S. markets. But keep in mind, QE is no guarantee of a more meaningful correction. It's no guarantee against that. Certainly that can occur. We've seen that happen in late 2015 and early 2016 with news out of China in both cases, which exacerbated it took what was a shallow floor and made it quite appreciable. I think NASDAQ was off something like 20% in each case. And keep in mind that this kind of correction can come at any time. So you have to always adhere to your stops. Also, the other thing is I know that if the markets gap down on just sudden overnight news, let's say nuclear attack, something really bad, then your stops, stops obviously are no guarantee that you're going to be honored at that price because the markets could gap lower than where you put your stops. That's no reason to sit on your stops because you're now sitting on a much larger loss. You still have to use the same principle of selling. Selling now, selling at the open, ask questions later. I know it's tempting, or psychologically you're coming from a weak place if, say, your stop was 5% away or 7% away from where the market closed and it gaps down 14% away. It can be a tough sell, but it's the right sell. And what's more important is even if it bounces, even if things bounce, you're going to eventually get caught out one day where you didn't sell at that 14% loss and it turned into something much worse. Because these black swan, true black swans like the crash in 1987, there's obviously 1929, we had the flash crash in 2010. They do occur more often than thought. Just look at the timeline. So, and especially where the world's headed, there's a lot more political risk. The risks are elevated with each passing year. So I do believe that new black swan events are on the horizon and they will occur. Now, on the bounce after the impeachment, the drop caused by the impeachment news, the volume diminished on the NASDAQ and a number of leading stocks as well. So the bear, in other words, is not yet out of the woods. You want to see a stronger bounce. In this case, you saw diminishing volume on the bounce, what's often referred to as the dead cat bounce. But nevertheless, we've written that in some of the cases, including some of our focus list stocks, the leading stocks that undercut and rally, and we talked about that formation on the webinars and also in our reports, the undercut and rally pattern offers excellent profit opportunities in such a situation. So even though the market might be bouncing weakly, you still might get a leading stock that pulled down, undercut prior significant lows, and now is heading back up. And your risk, if you can hit it very close to that price reversal, your risk might only be a couple %. Meanwhile, your upside on an undercut and rally can generally be several % or more. So all that's to say that profit opportunities do lay in wait during such sharp market drops. And the key is not to lose your head. So you can maintain a fluid approach and watch for these opportunities as they present. So, in a nutshell, first thing, protect your capital. Second thing, look for possible low-risk entry points as the dust starts to clear. And also know that these one big day drops are not predictable. I know, as some of you have said, how would I have been able to predict this? Well, sometimes you can, but not always. And in this case, don't feel that you should have known ahead of time. And on the other hand, major tops often do signal ahead of the major crash, and we can cite lots of examples. There usually are, or I would say always have been, serious warning signals ahead of major market crashes. I can't think of an exception to that. Therefore, those situations become far more predictable as the warning signs will show up. And the key with proper investing is to really stay on top of the data in real time so you can act accordingly. And if you don't have time to follow the market during the day, you can at least watch the markets on a day-to-day basis and take in the data and then adjust your stops and position sizes accordingly. And then redeploy your capital as new profit opportunities emerge. So with all that said, I'll mention a couple stocks here. First, we have CC, which is Kimura's, and that one is still hovering right at its 20-day, so it's still in buying range. Snap was an interesting one because it had a beautiful setup. It got very quiet in there, so it was a nice voodoo setup, and as we mentioned, it could be acted upon, and then it had a great rush to the upside. It was up almost 7% yesterday. Now, with these kinds of patterns, you can either sit, close at the top, but in this kind of, when it gaps lower, like it did, gaps lower by a small gap, take your profits. No reason to get greedy. These patterns are often pretty noisy. So, you could have also sold yesterday, right into the strength near the close. Because again, this is a market of taking profits. So when you have them in 7% in a day is pretty damn good work. Also, what's interesting about this one is you have the gap lower on earnings, on a weak earnings report, but notice that it didn't close at the low. It closes almost mid-bar, and there's a lot of volume. In other words, there's institutional support coming in on that day. So you could almost take that as not a down day. It's not an up day, but it's not as severe as it looks. And then lo and behold, institutions start to continue to snap it up. The volume is fairly large, certainly way above average for the next 2 days, and then it quiets down. So it's a really great setup in terms of looking for these types of undercut and this is by the way is a form of an undercut and rally trade because it undercut the prior low in March, and then on the very next day after the gap down, it moved higher from there. So that was your buy point. You could have bought it at the close on May 12th, and then you'd be sitting on a nice little profit cushion because the next day it was up over 8%. Let me see what else. There's COHR. That one has been in buying range as it kind of traces along the lows of the viable gap update. The 20 days catching up to price. The risk here is still relatively, maybe 4% if you use the low of the viable gap update. But keep in mind the undercut and rally remains in effect. So you get stocks where they might undercut a significant low, like the low of the viable gap up by, we usually allow for 2 or 3% ferocity before selling. Because it might undercut by less than that and then have a stage of rally of some sort. And actually, we saw that in SQ, that's Square. It did exactly that on March 22nd. After it had the gap up in February, but then on March 22nd, it undercut it by what's that? Probably less than 1%. And then moved higher, and then since then, it's established more of the base, and then is vaulted ahead since then. One last stock I want to mention is Light, and we talked about this one before. It had a pullback, was fairly close to its 10-day the last 3 days, and the thing is, this company has a very interesting story in that it does 3D. It provides 3D sensing photonic products. Apple may be using such products in its upcoming iPhone 8. And that also means all the other devices at some point in the near future will also use these sensing devices. And of course, Android, its direct competitor, would also look to keep pace by offering similar technology. So I think companies like Light, Light's one of the pole position stocks in this space, and I think it probably would earn some contract wins, some fairly major contract wins going forward. And you can already see, the price volume on this thing is quite strong. We've got, it had the gap up on earnings, and it's shot the new highs since. So, buying this one on mild weakness is not a bad idea. It could end up being a good long-term hold. It's had a good run prior. If you look last year, it went from July all the way up to October, obeying the 10-day. It was a very good tight run, and then when it gapped lower after that run, that's your exit point. So that those kinds of trades are layup trades. They're gifts when they do occur because they're so clean on the chart. And where Light stands right now could repeat that process, or it could also accelerate to the upside. And with that, I'm going to turn it over to Gil.
I would point out, some people ask, how do you know when the market's going to roll over? I got a feeling it was going to happen on Tuesday last week, and I actually went short. I think I talked about that last Friday when we had our webinar. And one of the things that I watch is the extension in leading stocks, and I just kind of track a group of leading stocks, and when they get a certain level above their 10-day, 20-day, and 50-day moving averages, I start to get cautious. And at some point, if I start putting out a short, and I think on that day I put a short out in Tesla and immediately started reversing off of the 320 level. So at that point, it's sort of confirming to me that there is some weakness here. So then what I'll also do is buy about a 5% position in the UVXY, and that went up 35% the next day. So if you're an active swing trader and you're selling into strength when you can get a sense that it's getting a little bit extreme, and in some cases, stock will go past me a couple of points, a point or two, if it's $100 or more stock, and that doesn't really bother me. I'm more interested in catching the fat part of moves rather than trying to sit through every pullback, which I think in this market you don't know when one of these pullbacks, because that was pretty gnarly. And if you can look at pretty much every stock, that was a hectic pullback, and that could have been the start of another August 2015, if you guys remember that, and that just kept cascading lower. So you don't know. So it's much easier to be selling into it. And what I thought is that you're getting a breakout here, but it's pretty marginal. There wasn't a lot of volume on it, and just everything was extended. So I just kind of backed away and then went short. And at that point, everything just kind of blew up, and so that worked out pretty well. But I kind of put myself in a position to benefit from that, mainly because I sell into strength, and I don't worry about whether something goes a little past me, because I'll just hang for a while and wait for the stock to come back into a lower risk viable position. And I know some people don't want to do that, but that's their preference. But in this market, I think you're subject to weird news spinouts, and so when I've got a big mover, I'll sell into the move. Here's Snap. This is an example as well, because I bought this thing off of the lows here as it turned up through the 1890 low, which is about right here, and it ran up very quickly, and that was about a 10% move or so, and I sell into it and then wait for it to set up. And at first, actually, I was thinking this might be a short, because you saw volume pick up here. It ran into resistance at the 10-day line here, and it reversed. So that was kind of looking a little grim at that point. So I actually did test a short and was able to squeeze a few cents out of it, but then I noticed the next day it didn't want to go down, and the volume dried up. So you can see the volume dries up there, and then on this day the volume's really drying up and it's holding tight. So basically, what do you have here? You have an undercut and rally move. So you have this move here, followed by a nice tight base or flag, which is a Wyckofffian sort of retest. In other words, the Wyckoff would talk about a stock making a low, rallying up, and then coming back to test that low on lighter volume, and that would be a constructive pullback or retest, and so we call it a Wyckofffian retest. I think Anna Cooling, in her book Volume Price Analysis, refers to it as test for supply, and so when there's nothing there, they turn the stock. But when that was getting really tight here, I shifted my view, and this is how I operate in this market. I don't operate from a strict bullish or bearish stance ever. I look at what I'm seeing and I'll act on what I'm seeing in real time, but I don't allow that to get me to adopt a rigid position. You know, like I'm bullish on XYZ or I'm bearish on XYZ. All I know is right now I'm seeing bearish action. I'm going to handle it with a bearish approach. In other words, shorting it. If that doesn't pan out and I get some other feedback from the market, and in this case with Snap, I could see this thing doesn't want to go down and it's holding tight, so I just flip and go heavy long and the thing blasts off through the 50-day. Now you're pulling into the 50-day line, and my guess is it'll pull back here. Where are we at? 21.29 is the 50-day. You're at 21.25, 24 right now. Doesn't look like anything but a normal pullback. What's the volume rate on this right now, Dr. K?
Snap is at minus 14%.
Yeah, so the volume's drying up, and my guess is you're going to get some sellers coming in, mainly because they do have a lockup that expired a while ago, and so you'll have some insiders come in, they'll hurl some stock out, and people who've been shell-shocked might take some profit. So I think this is kind of normal. I'll trade around a core position here, but it looks okay to me. So another one, we saw light, that's working out pretty well. Now here's Applied Opto. This one tested the 10-day line and it pinched out of there. So if you're buying along the 10-day line, that worked, as we've been writing in our focus list notes. And but I noticed these two, Lumentum and Applied Opto, are acting the best. The Sienna tried to get going back here, you can see a few days ago, and it died. Juniper has been one of the leaders in the group recently, but now it died. Maybe it's forming a Louis sort of formation. It's going to turn and come out of here, so you might keep an eye on that. What else? In the group, Finisar is another one in the group, and that one tried to come up, but it may be rounding out a low. I don't know, but it looks pretty ugly on the weekly chart. That's what it looks like. That's pretty grim. Almost looks like it could be shorted here, but in this market, what often looks like it should be shorted is not shortable, and it ends up turning and going higher. We saw that with Tesla when it looked like it was forming a fractal head and shoulders back here. There it is, and the fractal head and shoulders has a typical signature of heavy volume selling, defining the right side of the head, but that didn't play out. We had a pocket pivot here, which we put a report out on, and the thing took off, and now it's turning higher. Now notice something here, and we talked about this in the focus list notes. It starts to look ugly here when it sells off after earnings, but undercuts the lows and turns and rallies. And then it runs up to the highs, and that's a V-shaped move, so that's got to correct. So you come in, and that's why I was shorting it once I get a sense that it was running out of gas here. But then I notice as it's coming down, you're not really getting any heavy selling, because you can see down here there's not much selling. So once you undercut the low here, you undercut this low here, which has 305 and change. The thing is along at that point as it turns, and now it's heading back to the highs. So I notice also that short interest actually increased based on the most recent report, which is May 15th, and I find that interesting. The shorts aren't really getting squeezed out of this. They're probably just getting, the higher it goes, the more conviction they have, which probably means they're going to bust these guys one more time and send this thing higher. So I like this stock on any kind of pullback. Sold into this move here because we're coming up to the highs. I want to see if it kind of hangs out tight. I might come back into it later, but that's acting okay. So Momo was another one that we had on that was doing really well, and then they got smacked after earnings. But a lot of times maybe that's a buying opportunity. This is good for a trade here because you'll notice you undercut these lows yesterday and bounced off the 50-day line. That sets up an undercut and rally from about the 37.50 level up to nearly 40, 39.74, up to the 20-day a little higher. Yeah, actually past 40. So that's actually a decent swing trade right there. And now it's sort of flopping around. I don't think this thing's going to take off again soon, but I could be wrong, and this market thinks can fool you pretty easily. But that's probably done for now. But the rest of the group, the Chinese names, maybe need some time to rest. BABA hanging along the 10-day line with volume drying up, so maybe that looks okay. Same thing with JD, but a lot of these are extended, and I'd rather be more opportunistic and looking for pullbacks to buy into rather than chasing them or buying them up here in extended positions. Now, if you wanted to add to an existing position that you have much lower in the pattern, then of course you'd look at pullbacks, low volume pullbacks into the 10-day line and whatnot as potential lower risk entry points. So anyways, a couple of interesting names today. VEEV is launching higher at a viable gap up. It's really not moving. Notice how it opened up at 66.39, got as high as 67.86, and now then got as low as 63.62. So that's a fun intraday ride. And now it's trying to hang tight. I guess if you can buy it as close to this low here at 63.62 as possible, then you're probably okay. So that looks very powerful. So I had a chuckle on this one. I guess there's Trader Planet, who I used to write articles for, but I don't anymore because we now write our own and distribute them ourselves. They are putting out a chart of the day, and so they put out Viva Systems as a chart of the day when it's up, and it doesn't really do anybody any good because the thing is way extended, so I don't know what they think they're doing, but in any case, that's kind of interesting. I answer a couple of questions. Some of these are saying, regarding a DMA violation after first day close below 10 or 20 DMA, if next day's intraday low is below first day's close or intraday low, close, blah, blah, blah. I don't know. I think you're thinking about it too much. I don't really pay attention to moving average violations because in this market they've generally been buying opportunities. So if I think something's looking weak along a moving average, I just sell it. I don't wait for a violation because by that time it's down too much, so I don't really pay attention. But I don't know. You want to try and answer this one, Dr. K?
Actually, yeah, sure. No,
so here's a question. If next day's intraday low, you ready? Hold on. Let me.
I know what the question is. I pretty much heard. Basically, that is a moving day violation. It has to close below the low of the close below the moving average. So and that is the textbook. That's been my textbook definition of when I noticed these things working really well throughout the 2000s and well, not recently. That's the key here is markets change, and the moving day violation it does work for a long-term hold. If you're using on a something that has obeyed the moving average for a good amount of time, you can invoke the 7-week rule, and that still seems to work pretty well because it's psychology. If it's been trading that long for that many weeks or a few months without violating, and then it does, something might be changing, and you're better off taking your profits. But in terms of the normal types of these moving day violations, I would say that they really haven't been working very well for at least the last 2 or 3 years. We call it we started calling this a Seinfeld market a few years ago because what seemed impossible would continue to happen, and that's part of the ugly duckling phenomenon where things look as bad as they can on a stock and then they'll turn right around and start to move higher. And that's why tools like the undercut and rally are very powerful because they work great in this kind of environment, as do the volume dry up patterns and so on. So the violation rule, I would not pay too much attention to it until it comes back in vogue. If it does, if it does, we'll start to see evidence of that. But in the meantime, it's just a bit too slow for especially for shorter term trading. And these days, as you know, many of the positions are going to be on the order of days instead of weeks.
Anyways, some of these also in TMHC, buy at 23.65 with stop at 23.20. What do you think? If you have to ask us what we think, I think you should quit trading because if you're putting on trades and you need someone to tell you what they think, that's kind of lame. Because I remember Bill O'Neill used to chide us for if he found out we were talking to each other about our positions. And Dr. K, we never talked to each other about what we were doing. And never like I bought this, what do you think? I bought that, what do you think? You have to assess it in terms of the actual price volume action. So, and I remember Bill would beat us up. It's like, let's see, Taylor Morrison. So I don't know, what am I supposed to think, Paul? I mean, you bought it here and it's hanging along the 10-day line, the volume's drying up, so it looks like a setup that you can buy. So I don't know if it's going to go higher, but that would seem to strike me as a typical setup that we talk about constantly. So looks okay, I guess. If you need me to tell you, but though you probably shouldn't be trading, but I'd say just if you take the trade, just set it up the way it looks and set your stop. So anyways.
But that's the thing is every day is a new day, and first of all, we're not here to answer that kind of question. on a real-time basis. And of course, that's the art and science of good trading, is being able to size things up for yourself, which is why we write the books and the reports and conduct the webinars as we do, so that, we're basically teaching you how to fish rather than just handing you the fish. And just also a footnote on that, in terms of Bill's traders, we were all fiercely competitive with one another, so we never shared any of our ideas in terms of what stocks we were holding with anybody. It didn't matter, how close or apart you were. Yeah, that was just kind of the MO of his stable of Top Gun traders.
I would say, though, I've never felt fiercely competitive with the other traders myself. So, and if Bill hired a new trader, I always made sure that I spent some time bringing him up to speed. So I never really felt like I was competing against anybody except the market. Speaking for myself, Dr. K. Anyways,
no, I just wanted to clarify that, because all about my open door policy, because I had the inverse of what Lee Freestone was a, he was a closed book, and I shared all my ideas. People were always saying, "Why are you doing that?" And I said, because by teaching, I learn. It's just that simple, and it carries on to this day, where we all remain students. We're never not a student of the market.
Right, but I don't ever remember feeling like I was fiercely competitive with you or anybody else. If somebody did well, I remember when I came in and congratulated you on your Modena trade, so I didn't feel competitive about that. I thought that was great.
Yeah, no, I'm speaking in the general.
You're speaking for yourself and trying to project it onto everybody else, but that's okay.
No, but I wasn't. Like I said, if I were fiercely competitive in that vein, then I wouldn't have acted the way I did.
Right, you'd be like David Ryan was. You'd be a jerk to everybody.
Right, and that's just the way the group was. That was the MO of the group, was to be very inviting and protective.
I never felt that way, but that was just me. Anyways, but to each his own, and we all did well, and we were all amazing. So anyways, moving along, here's a question for you. Do you think the historically low volatility is largely caused by quants, which are now 27% of market trades according to CNBC? 2 years ago, they were only 13%. These tend to buy oversold and sell overbought, which tends to damp out volatility. Okay, you want to mess with that?
It's a minor component. I mean, it's a valid component, but there's a lot of other reasons why. Keep in mind that if you look at the VIX longer term, say in 2006, it hit all-time lows, or it's just about all-time lows. It was trading in the 9s. And that's simply because the markets were in a big rally phase, and so it made sense that they would go as low as they did. In fact, they touched 9.39. If you look at the markets today, they can't seem to manage any sort of meaningful correction. Meaning the markets don't seem to drop more than a few percent, and it doesn't persist. We don't get any corrections. Back in the day, you get corrections that would last a number of weeks, if not longer. These days, they're very short-lived. You might get a sell-off, and then the markets go sideways for a few weeks, like we've seen on the S&P. But that encourages further low volatility. So where the VIX is right now doesn't strike me as unusual, given the general market action.
Yeah, somebody's asking if Nutanix is a buyable gap up. It's actually what I would call, it could be a bottom fishing buyable gap up, but so far it hasn't really set a low. I've been watching this all day, and I've stepped in a couple times and stepped out, and it's not really getting any traction. So it reminds me a little bit of Twitter, because here's what it looks like now on the 5-minute 620 chart. We started to get, if you look here, and this is how you would handle it. You got a MACD cross, stretch and cross here. The market opened here. So you rolled over. You got a MACD stretch and cross here. So try and buy some shares. It runs up a little bit, but can't get past the 20-period line. It rolls over. So back away. Here we come again. Now we're back down along these lows, but I'm just waiting to see if it sets a low. I actually bought about 7,500 shares right here around 19, just above 19, just a few seconds ago, while Dr. K was talking, because this is a second spot I'm looking for a possible turn. If it doesn't work, I'll just bail out. I'll maybe give it 20 cents on the downside, and I'll just bail out, and then I'll come back. But I will go in and out as I'm testing this. But the task, if it's a buyable gap up, technically it hasn't set a low. So once we set a low in it, then you could buy it using the intraday low as your stop. And here's an example. I don't get fazed by, if you look at Twitter, when it pulled a buyable gap up here. Notice how it opened here at what is that, Dr. It's like 18. 1576 and no 1590 or something like that. It rallied up a half a point, and then it closed at the lows and below the opening price on heavy volume. Now that looks ugly, but the next day it held the intraday low and turned and rocketed higher. So I'm actually watching it on the second day, and when I notice it holds a low, and it's I think that was 1576, then I jump on it, and it runs up, and I got a nice move out of this thing. And now it goes sideways. It tries to break out, but there was a lot of news at the time. I think Mark Cuban was buying it and whatnot. And so if you're already in it, you're in it. But now what you have going on, you have this fail, and now we're setting up in what I would call a Louis formation, where you have an L that looks pretty ugly, and the essence of a Louis is that it's an ugly duckling pattern. Notice that Nutanix is trading. What are you guys all buying now because I said I bought it? I'm testing it. If it goes below like 1890, guess what? I'm gone in a second. And I've got plenty of profit margin because I made a ton of money over the last week swing trading this market. It's like been a swing trader's dream, wet dream, you know. And just proves that I'd rather be lucky than good most of the time. But in any case, you have a breakout here. This is a short formation, so it's probably premature, and so you get this pattern where it forms an L. And what we notice as it's forming an L here, along here, the volume is drawing up. So yesterday, what was the volume rate yesterday on this, Dr. K?
1 second. Twitter. It was at minus 48%.
Yeah, so I bought the crap out of it right at the 20 DMA. Towards the end of the day, once it got to around 18 and underneath, the last couple of days I've just been buying it right there and standing there taking stock until I got a pretty good sized position. Now it's starting to move off. So the Louis formation generally will happen, for those of you who are new to this, is that you'll get a very strong move. So it's a breakout, okay, and then the breakout fails, and that looks bad. So think ugly duckling, okay? And when the breakout fails, it undercuts all these lows in here, and it hangs at the 20-day line. Now, to me, after this move, that's a normal pullback. And I know people, you know, I'll sometimes get people tweeting me or emailing me like, are you concerned about the selling pressure in XYZ after XYZ has gone up 20% in 10 days, you know? And it's like, no, it's like, remember what Livermore used to say, action, reaction, action, reaction. You get a run up, you're going to have a pullback. The more you run up, the greater the pullback could be. But in any case, I'm noticing this thing is turning now. What a coincidence. I'm sitting there, I buy it at just above 19, and then it starts to run up. Are you guys all buying it? All right, confess, out with it. I'm going to sell it now. Take my 15 cents. That'll pay for some sushi, maybe. Yeah, a little bit. Anyways, but we'll see if it works. I mean, at this point now, you've set a low at 19 and change, just above. What's the low here? 19, pretty much. So now you got a low at 19. If you buy it here, what's your stop? 19. So I'm probably use like 1890, giving it a little room. But that's what I'm doing. That doesn't mean you should do it. And I would definitely not be doing something just because I'm doing it, because I can sell something as soon as it just doesn't look right, or even if it rallies from where I bought it and I make 20 or 30 cents and then it doesn't look right to me, I'll sell it and get out and take a little profit. I think, though, this one might have more potential, this Nutanix. Get back to. So I'm showing you, you know, if it's doing this, this could be like Twitter, okay? So, I mean, I don't know. I could be full of garbage. But all I know is I'm watching this for a low. So here we are, 19. We're trying to put in a low here. Let's make this a little bigger. And so I guess now what you're seeing is you got the, now this is interesting, what I'm seeing here on the 620 chart, because this is a little instructive. This is where you put a low on the MACD and you turn. So that was your first turn, but it failed at the 20 period line. And what I'm looking for when I buy MACD stretch and cross, I'm going to see a confirmation move that holds at least for 2 bars above the 20 period. That's just the way I operate. And now notice as you're making a lower low here, you're undercutting this prior low, intraday low here. So that low would be, what? Whoops. This low is 1912. So you've undercut that by 12 cents. So it looks like we hit a low of 19 even. Yeah. And at the same time, though, notice that the MACD is moving above, and it actually crossed here, but now it's turning back above. You guys can all see that, I hope. Let me see if I can make this bigger, just in case you guys are blind like me. Let's make it big. Okay, that's nice and big. But you can see now what I'm looking at. So the one thing that catches my eye here, and the reason I'm buying it at 19 and change, now we're turning 1929, so it's turning fast, is you undercut this low, okay? And yeah, I bought it in here, and I got pushed out in here, and I lost maybe a dime, but I'm just out quickly. Now it's all coming back to life. We're 1923 bid. Must be all you guys buying it. I don't know. But notice how when you undercut this low, the MACD is actually higher. And now we're getting a MACD cross again. So my buying along here on the base of an undercut and then a mini rally back up through this low, yeah, if it turns and gives me a 620 sell signal, then I'll probably just like triple the position or something like that. I don't know. We'll see what it looks like when I get there. I'm not going to say for sure what I might do before I actually do it, because you never know. The situation's fluid. But I'm just watching the stock and letting it tell me what to do. Okay, I don't have a bullish or bearish bias. So to answer the question, and I don't know why you're asking Dr. K, since I'm the guy who likes to buy the ugly duckling setup, since I'm the one who made up the term ugly duckling, although Dr. K can confirm that any gap up move can be played as a buyable gap up simply by using the intraday low as your stop. And if the volume is big enough and the short interest is big enough, it could drive the stock a lot higher. So I think this might settle down, and maybe you're not even buying it today, you're buying it tomorrow, but I'll take a little position, not tomorrow, but Tuesday, because we have a long 3-day weekend. You can treat it that way, and any of them you can treat that way. So you don't have to, number one, you don't need our blessing, and number two, the setup is always pretty concrete, but I'm just giving you some sense of how I'm looking for a low on the 620 and how I might be getting it based on the information that I'm seeing here, which is essentially a MACD divergence. So you make a low in MACD here, but it's up higher as the stock makes a low here. The other thing is you're getting the undercut and rally on an intraday basis where you undercut this low, and now you're rallying above it. Now what I can do, since this is a 1912 low here, what I can do is use that as my trailing stop and maybe give it another 0.5% down to 19. So now I can keep things a little bit tighter because it's starting to work, and I hope it's not just because all you guys are jumping in and buying it. But anyways, somebody's saying after the sell-off last Wednesday, I run a spectrum analysis in HGS Investor against the NDX, as this was the place where the money got in the last 5 months. I've realized that 92% of all the stocks had a price decline, but only 30% of all stocks had a 50 DMA volume greater than 0%. I got the impression that this sell-off was just another step of market manipulation. Well, for me, that's kind of over quant, but if that does help you get a sense of that, I kind of had a sense of that as well. And if anybody follows me on Twitter, I was saying early in the morning on Thursday that you had to be wary here of panicking, because this could set up some undercut and rally type of setups or ugly duckling setups that you could buy into. And in fact, when you get a market sell-off and things turn off the lows, the most powerful setup you'll have is the ugly duckling setup. The undercut and rally under ugly duckling, to be specific. There's also the white copy and retest, but we saw that in a number of stocks. And you know, a lot of them could have been bought on that basis, and you just go through the focus list, and you'll see, like after Wednesday, that there are a number of those types of situations. Somebody says, "God, you guys are funny." You can just call me Gil, Joe. You don't have to call me God. Let's see. We are all God. Let's get cosmic now. TTD, what about it? A nice and tight along the 10-day line. I think you can buy it here and use a 10-day line, or add here and use a 10-day line as your stop. Okay, that's what I think. Love your political commentary on Twitter, Gil. Thoughts on oil prices and E&P stock? I don't know. You know, I've been watching the oils for a long time. And Parsley Energy is one of my favorites. Fang is another one. CPE, I think, is another one. These are all little oils, or big oils, or oily oils that have strong earnings. And so on that basis, I am interested in them if oil turns. But I don't think, what's oil doing today? Oil is, come on, what happened?
It's bouncing.
Yeah, but it got tagged yesterday, so now the Dow is up. Boy, market's going to turn and go higher. I figured what would happen today is that you would have all the weenies would get out of the way over the long weekend, because they're terrified something might happen. it seems like everything has already happened. You know, Trump is going to get impeached. Trump's agenda is in jeopardy. If you watch MSNBC, I love to watch MSNBC because it's just so ridiculous, and it's a great contrarian indicator. Like the other day, was it yesterday? They convened a panel uh, on this Republican congressman or whatever in Montana who body slammed a reporter who happened to be a Fox reporter. Now, they didn't mention that, but they actually blamed Trump for that. And I thought that's hilarious. But the media is just so ridiculously stupid these days. I don't know.
They're part of the agenda to take him down. So he's got to be very careful.
Yeah, there was a great article in the Wall Street Journal where they talked about the body politic there is a foreign object in the body politic, and as is consistent with natural laws, it's doing everything it can and desperately trying to expel the foreign object, which is of course Trump, because all of the permanent ruling class or governing class sees that their livelihoods are in jeopardy, and I do think that's the case. These people get fat just being Congress people. I'm amazed to see that people like say, well, John Bonner, who was a Republican, and I'm not a Republican or a Democrat before any of you Democrats and liberals get all in a tizzy and get your panties in a bunch. I'm a libertarian, which I think is a much more principled approach. But in any case, John Bonner, has like a $100 million net worth when he leaves Congress. Who's a guy from Nevada, the scumbag from Nevada? Harry Reid, he had like a $120 million net worth. Nancy Pelosi goes from $0 to $40 million net worth in 35 years of being a congressperson. And they only make 140 grand or so. So how does that one work? I want to get in on that gig. But I got to think all of these people are just career politicians who've lived off the taxpayer all their life. And so they're going to go, everybody's going to go after Trump, and they have the media on their side, and that's what they're doing. It'll be interesting to see how things play out, but I'm more interested in what the market does, and I don't really get into the politics too much. Let me just give you a headache. Somebody asked me, what about Triple D? Well, I think that's a nice run-up, but you're waiting to see if it forms a flag. Okay, it's not, or some sort of a base that you could buy into. I don't consider this something I would want to buy into, mainly because it's had a big move, okay, and now this is too short. So I'd like to see it like undercut these lows and bounce up the 20-day exponential. If it did that, then I might be into it. Kind of like what Twitter's doing right now, bouncing off the 20-day exponential moving average. But it's interesting how all of these names ran up. So I was looking. Stratasys is the other big stock name. It's doing a similar thing. You see the Louis formation. This one actually looks like it's, it's down to the 20 DEMA, so this may be in a position to buy right here. So let me see something here. Yeah, that actually looks kind of interesting here. Let's see. Let me test something here. Let's see, I just picked off 5,000 shares at 282689 is what they're giving me on my fills, and where are we sitting at? We're at 2825. So different. They kind of took it and sold into my order, but this probably has a low of 27.55 as a stop, but this is setting up. So I think these are all interesting. The Triple D and the Stratasys. So they're on my buy watch list, and they have been since they had these big moves. Now, if I was really smart, I would have been buying this thing much lower, both of these, when you had the bottom fishing pocket pivots. But I think they came out with earnings and they shook out, and you can see this action. They shook out here on big volume, and then if you don't count this as a down day, which I wouldn't, I would count this as pocket pivot support at the 200-day and 50-day moving averages. Then you could have bought here the next day, and you caught that. Now, I saw that, but I didn't pull the trigger. I was just a big weenie about it, and I thought that was kind of lame. Oh, let's see. I think the algos learn to buy the undercut action. That very well may be the case, and it's part of the ugly duckling thing. Is part of my whole philosophy of thinking like an algo. Like the Bangles song, Walk Like an Egyptian, Think Like an Algo, so you can sing that song and replace the words. It's really fun. Anyways, MACD turning positive too. On which one are you talking about, Wilfred? The Twitter or the NTNX? Twitter looks good here. You can see, look at that. It's forming a little cup with handle intraday. You get the cross here. I think it's going higher. So I have a pretty good sized position on this thing. So the NTNX is trying to push. Looks pretty good. I think this thing will hold up. I think the NTNX will go higher. Is that the one you're talking about? NTNX, yeah. So you saw probably what I was seeing. Somebody's asking a question for you. When you are trading on the 620, will you take a position based on an intraday undercut and rally before you actually get the 620 signal? Yes, I just did on NTNX. Bought some just like 1905, I think it was, because I saw it. And like I said, I'll use 1890 as a stop. If it doesn't work, I'm gone. I mean, I bought some earlier at 1944, something like 48, and I punted that and let it come back in. And I'm flexible. I don't care if it moves around 30 or 40 cents on me and they're nicking me a little bit in the process. I don't really care because I'm playing for something bigger, because I think if this thing gets going, you know, you could be heading back up into the mid-20s. So like I said, Twitter is sort of a, and while I don't like to use models for you know, in terms of looking at one stock and predicting what another one, Twitter is an example of a stock, though, that gave up most of its gains on the gap up day, but held the lows. So once this thing establishes a low at 19, if we close above that, or whatever the low turns out to be, if we hold the low tomorrow, so in other words, we establish the low today, if we hold the low tomorrow, then it could be bought maybe tomorrow with lower risk. But I think right now we're operating on the basis of a 19 low, and that would be your stop. So you're only 20 cents above. I mean, if you can't afford to lose 20 cents, then you probably shouldn't be investing. So let's see.
Yeah, I just want to also point out that the 620 is nice because it gives you a reference point on where to sell if the trade doesn't work out, because on the undercut and rally, as you know, sometimes it'll undercut again intraday and go lower. So obviously you don't want to be still remaining in that kind of position. You want to cut your losses short and then reestablish your position if the 620 works out.
Somebody asking about Wix. Well, we put Wix on the focus list, but if you look at this, it's just hanging tight. Volume is drying up. It's hanging along the 10-day line. Now, the one thing to keep in mind here is that if you look at the weekly chart, you're in what is essentially a 4-week base, and you can see that it's a sort of a triangle pennant, whatever you want to call it. You can put a little thing here and somebody holding it with their hand, and that's anyways. So you can see the pennant. So it may be premature. So in other words, you only put 4 weeks in the base. Maybe it needs more time. So on that basis, you know, then maybe we're looking for this to hang out, and maybe it voodoos a little bit more and dries up. And so for now, I think if it touches a 50-day line, you can buy it there. If you choose to buy it off the 10-day line, which, by the way, is also coinciding or in confluence with the 20-day exponential, which is the green one here, and you have the magenta, that's the 10-day. The green one is the 20-day exponential. You can see that it did hold today, and it's trying to come off of there. So if you bought it there, then you use the 50-day as your maximum selling guide, but the 10-day or the 20-day could be a tighter selling guide. So anyways. Wix daily chart reminds me of Buoyzone at the time you sent out alert a while back. Well, it doesn't remind me of that, but because this is what Buoyzone looked like at the time. Back then, I actually talked about it in the VoSI Voodoo report when it was hanging around here, and then it had one move up and it broke down. And notice how it undercut the lows of the pattern. This is actually great. Notice how it undercuts the lows right here, turns and rallies, sets up again, boom, runs up, and finally it pulls in again, and finally it works the third time. So the rule of 3, okay, fake you out once, fake you out twice, and now take it straight up. So I don't really, this to me is just holding along the moving averages, so I don't really see this as being anything like Wix, to be frank, but I think Wix is just Wix, and you don't have to look at it necessarily as being like anything else. I think this is just holding in a base, and it's already had a big uptrend. Buoyzone was kind of flopping around all over the place before. So I noticed the Stratasys is moving up a little bit. Maybe you guys are buying it. Anyways, we got about 10 minutes left. What do you guys want to talk about? A couple of names that I've liked here the last couple of days. Here's Data. And notice how this one also, it breaks out, but this is kind of a short pattern. It fails. When I see this kind of pattern, I'm always on the alert for a Louis. So this is a Louis because basically it tries to break out and it fails. So now it looks bad, okay? So if you're a CanSlim robot, you say, oh, failed breakout, bad. But what it does is just sets up again. The volume dries up right here on the last day, and then boom, it goes out. So there's the L turns into a U. That's the Louis, okay? See, one of the requirements for being a trader is you have to be really clever and come up with clever names for all the crap that you look at. Anyways, and then you can sell it to people. You can write books. So we're actually, aren't we changing our service now, Dr. K? We're charging $999 a month for private access, which means that we'll drop our drawers and moon you.
Yeah,
that's what we consider private access.
Yeah, how did that come?
I don't know how it came up. I always think about, no, because you come up with all this baloney, and then people sell it to people, and they try to pitch them on it, and then they try to rip them off. I think all of it's just garbage. So, anyways, I'm a cynic, and I see people paying. Personally, I think if you're dumb enough to pay $300, $400, $500 or more a month for some website service, you're a moron. And I personally couldn't look at myself every morning if I was trying to do that to people. So, got any new merchandise? Yeah, I do actually, Scotty. Cloudera. I hope you're not talking about my vodka collection. Cloudera is an interesting one. You guys might remember MuleSoft I talked about, and I think this is really instructive. I've even talked about it over the weekend because we thought maybe it was an undercut and rally here, and it did rally a little bit, but then it failed. But then it undercut again, and you got to watch these things. I watch very closely lists of IPOs. Okay, so I keep a list of recent IPOs within, say, the last 6 months, 6 to 12 months. And what I look for in all of these are undercut and rally formations occurring after an initial IPO base is formed. So this guy came public, I think it's $17, had a nice move up, and then just flopped around forever. And what I'm always looking for are these undercut and rally moves. And you got to stay with these. You have to be persistent. As I wrote over the weekend in the Voodoo Report, this shows how being persistent will eventually pay off because you start to work here, but you could have used the 10-day line as your stop, and you would have gotten out with a mini profit, okay, at least not a loss. And then it undercuts again, and here we go again. It comes back up through this low, so you could have gotten back in the stock, and you even had some time here, and volume pretty much dried up along here, and then boom, it takes off. And then it comes up to the top of the base. It forms a handle. Notice how volume dries up right along the 10-day and the 20-day. There's another entry point, and then boom, it takes off again. And so this is the type of thing I will look for among recent IPOs, okay? And that's a key strategy I use when tracking IPOs. A lot of them will set up in tight flags. For example, we can go back to Acacia. Well, actually, no, I like Twilio because that was one we saw way back when, right after it came public. You can almost see how it puts a tiny little flag, and you can almost buy it on that, and you get a gap up. That's like a buyable gap up 4 days after it goes public. But then you could have bought it in here. Notice how you had the undercut and rally here, get the undercut here. So I'm always watching these IPOs and looking for these types of setups. And if something comes public and never goes higher after coming public, like has an instant move higher and then fails, and the good examples would be one of the mainstays of the VoSI focus list is TTD, not triple D, but TTD, which had a nice move right after it came public and then set up in a base. We're going to squish this down, and we kept it on our list, and we kept saying you can go back and look at the weekly focus list report that we put out, focus list review. Every weekend we put it out, and we kept saying that if you're going to buy this stock, you have to buy it on weakness because it goes nuts on the upside and gets extended quickly. So it was a thinner stock. It's gotten a lot thicker, and that's a good sign. But let's just take a look at this. So along the 50-day, you know, it's where you could have bought it all these times. And then you have a big run. And then remember, you guys can go back maybe a few weeks ago and review some of the webinars. And I was talking about how, okay, you had a nice big move here, okay, and now things coming in. And it's setting up in a new base, most likely. And of course, it's violated the 50-day moving average, but that's just a fake out because within the context of the prior move, this base is normal. And as it's rounding out the lows again, you can start looking at buying. And you had a pocket pivot here, I believe. And that would be here. Yeah, so that's a pocket pivot, I think. At least a 5-day. Maybe there are a couple of 5 days.
5-day.
Yeah, and then you had another pocket pivot here. And now it's off to the races. You gap up, and it's way up there. But again, this is the same concept I'm talking about. I'm tracking, and we actually put this one on, you know, while it was still in the base, which I think was smart of us. Now Nutanix pushing up to 1928. So that looks like it hit the low. So now I think you just buy, use 19 as a stop. If it doesn't work, it doesn't work. So if it doesn't work, no sushi for you today for lunch. Anyways, so, you know, these are the things to be looking for. And I'm always looking at where something might be forming a base. And rounding out the lows of the base, especially if it's a recent IPO that didn't really go anywhere. And I think you can find several of these like that. Goose, I know one of you guys, John, I don't know if you're out there, but one of you guys was playing this one. Now this is a nutty stock. You can see it's very volatile, chops back and forth. But again, you know, you had an undercut rally here. You had another, this didn't really undercut. You set up here, and then you came in and you just undercut this low and you turned out. And now you're rocketing out. This is kind of a crazy move, but it's not, you know, you're going from 16 to 1850, so that's what is that, Dr. K, like 15%? So this really, it looks crazier than it is, but the thing is being opportunistic and watching how it forms the base and looking for your entries within the base. So I suggest that you all keep a list of IPOs, recent IPOs, and just track the bases. So Cloudera is one I've been watching. Another one that never really went anywhere was this Yext. But notice how it's now undercutting the lows of the base here. Anybody see that? What's the volume rate on this thing? Do they have one yet?
Well, it's minus 27%.
Yeah, let's see what my trusty HTSI says. What I like about HTSI, and this is something I asked for. What am I doing? Yes,
but yeah, it's this
here.
Yeah, the minus 27% is distorted because it takes that first day into account.
Minus 19, yeah. I just have them, when they put this feature on, I just tell them use, if you don't have 50 days for a 50-day moving average or volume, just use the, hold on.
You can use 20 days or something, but just that first day should be eliminated.
Oh, that was me. I just pushed Nutanix up to 1936.
That first day distorts the whole.
What?
The first day distorts the whole average because it's 11.3 million shares traded. Yeah. That's why they need to get rid of the first. I'd say the first couple days.
I think Ron normalized it or something. He did something on this, and I told him, we want to get a sense of what the average volume is, and I guess you take away the skews, what would skew it, so the outlying data points, and try to normalize it. So, but Ron's pretty good at all that, and he did a great job setting this up the way I wanted it, and I think it works pretty well. $699 a year. I actually have this. This is my main squeeze when it comes to looking for technical setups. I have MarketSmith just so I'm on the same page with a lot of you, because a lot of people bring it up. I saw on MarketSmith, blah, blah, blah. So, and I think it's a good product, MarketSmith, for what it does, but it's not technically oriented, so I don't really use it as a primary technical tool, but it's a good source for ideas, and I also use Telechart 2000. Here, you guys, we'll bring up Telechart 2000. Anybody use Telechart 2000? Somebody says, what is your new favorite vodka? Monopolova, actually. I got a bottle of that, $12.99 for 750 milliliters, and I think it's the best vodka I've had so far, and that includes Chopin, Five Wives, sorry Scotty, but Five Wives comes in number 2, Blue Ice, I mean, you just name any of them, and this one I think is far superior, and it's cheaper. So, paying a lot of money I'm bringing up my Telechart 2000. Here she comes. And the thing I like about these guys, HCSI, Telechart 2000, stock charts, they want you to use their charts when you make presentations. They're not morons like IBD is and think that their stuff is proprietary. So if I could get up here and show you guys what I use MarketSmith for, it would probably make you want to buy it. But I use all of these, and I have a setup here where I have a daily candle here, a 620 5-minute chart here, and a weekly chart here. So if I want to plow through stuff really fast in the middle of the day, some of my favorite things on this system are the volume buzz, which is here. So you get this volume buzz. It's showing you what's moving on volume. So we can see that Nutanix is actually one of the hot movers, and the prices are delayed because you're seeing 1923, 1925, things trading 1930 bid. And but I think this is helpful just to give you a quick sense of what's moving. And then what I like most about it is the fact that you can just, if you have a list of stocks, so this is my buy watch list, you can just plow through them. And I'll just do this just as fast as I can. If something sticks out in my eye to my eye, then I'm all over it. Do you guys see that? Isn't that awesome? The way it just kind of, and so I like that. And that's one thing I'd like to see them add on HCSI. They haven't done that yet. But anyways, so I use that, and I use stock charts. I like stock charts. It's $120 a year, I think, and it works because I think you can get real-time data. Anyway, so I think these are great tools, and I use them all so that I understand what people are looking at when they ask a question. If you could only use one, which one would it be? Well, I think that answer is pretty obvious. HCS Investor. So, and it's one that I helped these guys design in terms of the features I wanted. So, and I don't need fundamental data. It's a nice thing to have, but I don't need it. So, are you guys buying YEX here? Look at it. I think it's starting to move up. Let's take a look at this. You dogs! You didn't even give me a chance to buy it. 1314, 1350. It trades 309,000 right now, so that's going to work out to about 500 or 600 on the day. I think Nutanix has bottomed. It's going to close at 21 by the close. Here we go. I don't know. We'll see. But this one might be interesting. YEX. Did anybody know the story here? Do you know the story here, Dr. K?
Actually, it's a new one, but they're one of those platform providers it's a cloud stock basically to sync all the digital knowledge in a company through all these other services, which include Apple Maps, Bing, Facebook, Instagram, etc.
Well, that might be on a Voodoo report for this weekend.
So it's an interesting idea for sure. It's one of those companies that aren't earning anything for the next few years.
500 years, right? Kind of like Tesla, but that doesn't keep up.
Interesting. It makes it a bit. The story becomes more seductive that way because some of these can end up being the next big name.
Right.
Not, but it's worth a look.
Another one is an ugly duckling is Line Corporation. These guys are actually going to make over $1 this next year, and I gotta think, they're kind of like don't they have like social media type stuff and. I really think that one of the reasons Snap
Japanese social media.
Right, and one of the reasons I think something like Snap will work and Twitter will work eventually, and Facebook has been working. I think social media these stocks are not going to necessarily just be social media, but they're actually becoming media stocks, where content is now going to be thrust across these systems. And I think that's a big thematic basis that's going to fool everyone who's looking at something like a Snap or a Twitter or even a Facebook on the basis solely of the existing business. I think it's going to evolve in the way that the internet did, far beyond what many of us thought it would be, although you had inklings and hints of it back then. But in any case, Line Corporation.
What's great also about something like Line is that their first mover advantage in Japan. So much like Amazon has done, as I mentioned I think the last webinar, when you have the network effect like Amazon does, it's a juggernaut, and so whenever it deploys new capital into a new area that it realizes is low-hanging fruit, it by de facto becomes the dominant player in that new space because of the network effects. In other words, everyone goes onto that new platform. the design. So LN has that advantage in terms of its Japanese audience, and this applies obviously to anywhere in the world, China especially. So it allows for these companies, if they're smart, to grow at a fairly fast rate, and that could bode well for stocks like LN.
Yeah, I think it's interesting. And notice the ugly duckling. You got the breakdown on heavy volume after earnings, but it closed in the upper part of the range. And then the next day moved up on volume, and then it gapped down, undercut that low, and it's turning back up. So this could be an ugly duckling situation to keep an eye on. But anyways, that's another one. But I'll probably talk about Yext in line. Get it? Yext in line. Sorry, that was a bad pun. And they're not just Japan. That's right. They're in, I think, China, Malaysia, a lot, Korea. So I think there's a lot of potential there. Before we go, let's take a look at Nutanix. To me, I don't know why, but it reminds me of a chocolate drink mix. So here we have the MACD stretch and cross, but so far no MACD cross on the 620. So the 6 period is not crossed up. So you may, if you're sitting back and a little timid, my view is it's put in a low at 19. Okay, so that's your stop. End of story. You could give it another 10 cents or 20 if you want to, but I would keep it pretty tight, because even if it got back down to 19.10, I'd probably be gone on my position that I took while we were sitting here doing this webinar. But now if you get a push on the 620 chart above the 20 period, so if the 6 period here crosses above the 20 period, then you're going to go hog wild. And I've actually already been adding to my position based on the fact that it has now cleared the 20 period here, and if it drops below, I'll drop that part of the position. So I'll be trading this like a madman all day long. It's a lot of fun, actually. It keeps me occupied, keeps me out of trouble. So says my wife. But in any case, that's how I'll work it. And I'm just very flexible in moving around. And of course, I have to have a huge amount of intraday day trading buying power, which I do. And anyways. So on that note, I think everybody should tweet Mark Zuckerman, CEO of Facebook, who's babbling about a national basic income that we need to have. And how is that going to be paid for, Mr. Zuckerberg? Are you going to spew your billions of dollars and give them to the poor? I really hate these moron billionaires, who they make billions and billions and billions, and they suddenly think that all the rest of us should be providing stuff for the poor. No, idiot. Why don't you just give your billions to everybody? As far as I'm concerned, nobody needs more than a $20 to $30 million net worth to live very comfortably. Never been a problem for me. And but then I don't need to buy 4 houses in Palo Alto to create a big family compound like Mark, the socialist Zuckerberg, does. But I got to tell you, these people make me freaking ill. And there's another stat I tweeted today. You could tax all income above $1 million at 100%, and you would only raise a little over $600 billion. Okay, but the other thing to think about is this. If I know that once I make $1 million, every dollar I make past that first million is going to be taken away by the government, am I going to keep trading or working? Hell no. I'm going to go golf or go surf or do anything, wine taste, get drunk on vodka, in the park or whatever, and become a wino man. But they just don't get it. So anyways, that's my rant for the day. But I just heard that today. I just think, not another one of these morons, just like Warren Buffett. Anyways, let's see. We got 1947 offered now. We're pushing it. So there we go. And you can see it pushing higher as I babble. Anyways, you guys, I hope you learned something useful out of this webinar today. Notice Snap is getting ready to turn, and you got the MACD kind of divergence as well, and it's probably going to turn back up. I think Snap goes to 30. Is that a bold prediction? So anyways, VoSI Securities puts strong buy, core holding, focus list, buy, price target of $100. Maybe we can make it go up $5 like Goldman Sachs does. Anyways, what was the vodka you recommended? Monopolova. It's here, I'll write it. M-O-N-O-P-O Monopolo, and the W's in Polish are pronounced as a V, not Monopolova. And actually it was given to me by a friend who I just gave my Telecaster guitar to, so he turned me on to it. I thought that was a good trade, an American Telecaster for a bottle of vodka. Am I stupid or what? in any case, that's the name of it. It's very good. Try it. It's a little kind of sweet to some, I guess, but to me it's just smooth, so I like it. Anyways, you guys, that's all we've got. I'm out of breath. Maybe I need some vodka. So we'll talk to you guys next week. Have a great weekend. Have a great long weekend, and we'll see how we close. I think you close. You're going to push higher from here now that they got everybody. All the weenies who didn't want to hold stock over the weekend are now out of the way. Check out the YEX as an undercut and rally. Check out the line. I think I like YEX better. So, but we shall see. Anyways, have a great week, and we'll catch you next week. Take care.
So long, everyone.